Good evening, Ken at Tortoise Capital. This is a review of the daily trading plan for August 18th, 2021. Let's go right to dashboard number one. Actually, let's do the market health check first. So we've had the second day of harsh selling on an expanded range. It came all the way down and tested the Bollinger Band mean. That's the least surprising move after an excursion to Z2. That's the least surprising move. That's why we talk about having our stops at various locations here at the edge of the dragon, edge of the river, bottom of the dragon, in order to preserve the hard-won gains climbing up the steps. You don't want to climb up the steps and then jump out the window and give back 10 days worth of gains in 2 days of selling. So holding right at a critical state at the Bollinger Band mean, about 2% sell-off from the swing high. You see the whole 3-period moving average has rolled over. The RL30 has rolled over. We have a P1 condition where the RL10 has crossed the RL30, and that gives us a reason to be neutral with respect to direction. The next least surprising move would be down to test the bottom of the river like it did here, and that would get us down here just past the 2.5% sell-off. So this is a tactical market and no directional bias. You can see we're still bullish quiet, long-term overbought, short-term showing significant weakness, red bullish on the percent stretch to the 200. Still risk on in terms of volatility, so we are just beginning to get a sense of the volatility. Now you see that it just rolled over, so volatility starting to creep in. Significant number of signals in the broad markets for index channeling and a few in the overreaction as well. So that's a market that is at officially a critical state for a reversal of fortunes back to the upside now. When you see that many, that's a market condition and is worth our attention. Like the last 5 times we've got that signal, there's been a really strong upside follow through, a return to previous highs. It always feels different when you get the next set of signals, and that's why we frame trades in both directions. Lots of channelings, a handful of auto framers, big breakdown in Intel, and then a series of other ones making new 10-day lows, so that's a cause for some real concern. Disney at 4.5 to 1 is interesting. Boeing at 3.6 to 1 is interesting. Lots of 5DDs to monitor and frame. So plenty to choose from. In the ETF 30 tactical, almost everything's on a channeling or overreaction. Only one doji today. One breakout to the upside in Mexico, but everything else was kind of breaking down, including the oil and Latin America. Half a dozen auto framers. Interestingly, no 5-day downs. That's surprising when you have that many in the Dow that were 5DDs, but not in broad indexes. A handful of auto framers showing pretty well. Part of that reason is the size of today's range makes it difficult to find a 2-to-1 reward to risk back to the 10-day high. But that should be shaping up in the next day or so. We should see more of that once the daily ranges get smaller. We should see those ratios improving. But for the meantime, you get Disney, Boeing, emerging markets, Caterpillar, Brazil, and the Russell all looking pretty good on that frame. Only 3 squeezes, McDonald's, Disney, and United Health. Everything else suffering because of the width of today's range. Or I guess the height of today's range. Still being dominated by spring and summer, but now you're starting to see things roll into the fall and a few already deep into the winter. The bright red indicates just how broad-based the weakness was today, and only a small handful of things testing out well on the 2-day and the 10-day. So Mexico is kind of the lone survivor here. Treasuries looking fairly good with an 85 and a 71. That's that weakness creeping in. Those were the last 2 channeling signals, and both paid off. So we're going to be mindful of a possibility of a move in either direction here. And that's everything we want to talk about. And let's get ready for tomorrow. Thanks for your attention.